So, if you want to learn how to trade options and start making money trading options, purchase my ebook located in the description down below. And moving on, so how did I make $150 trading McDonald's call options? So, at 12:52, I got into McDonald's call options, which is this candle right here. So this candle right here is where I got into McDonald's call options. As soon as McDonald's landed on the 50-day moving average, I used the 50-day moving average as support basically. And so what I wanted for McDonald's to do was to bounce off the 50-day moving average. But that didn't happen. As you can see, the next candle went below the 50-day moving average. And so what I basically did was I waited until the position was down. I want to say it was down 10%. And so when the position was down 10%, I bought a couple more options. And basically what I tried to do as my position was going down, returning back to being down 10%, I basically tried buying more call options to suppress my position at being at the 10% level. So I wanted my position to be around 10% as long as I could. That way when McDonald's would eventually go up, my position would go up a lot more faster. So basically when around 13:56, I sold out of McDonald's, making $150 just trading McDonald's call options. So basically at 13:56, which is this candle right here, is when I sold out of McDonald's. And the reason I sold out on this specific candle is because if it was below all of the not below all, but it was below the 50-day moving average, right? And so to me, that meant okay, this could possibly mean that McDonald's will have trouble trying to regain, or not regain, but reestablish itself on the going above the 50-day moving average. So you can see that pretty much the whole day McDonald's just had trouble going back up again. And so it was a pretty good idea as soon as McDonald's rose, went up again and got rejected by the 50-day moving average, I got out the McDonald's position. And so basically my plan was to get out of McDonald's as soon as it reached the 50-day moving average, because I basically knew that if it was under the 50-day moving average, then it's probably going to have trouble breaking the 50-day moving average throughout the day. And that's basically what happened throughout the day. McDonald's just was, didn't perform well throughout the day ever since, around 13:30. And so, or I guess you should say, what's my next trade? Well, basically, I'm going to update you guys on the small portfolio challenge. So basically, right now, the small portfolio challenge, right? Basically, the Pepsi call option trade is down $712 with 50 cents. Am I really worried? Not really, because I've backtested this strategy, that I've been talking about for a long time. And basically, what is that strategy? Basically, so step one, you go to finviz.com, right? And basically, what you do, right, is let's see. I'm gonna show you guys. So you click where it says screener. You click where it says performance, click where it says market cap. This strategy only works with mega cap stocks. And then click where it says perf YTD. It's going to show you a list of stocks from worst to best. And so step one, choose one stock that you really think that is oversold. Step two, buy a call option on that oversold stock. And then step three, basically you're going to basically wait. Once your position is up 5 or 10%, you sell out your position. If it's down 5 or 10%, and if you think it's the best, opportunity, to buy another call option, Once the position is down 5 or 10%, you buy. But if you feel like it's not and you want to wait until your position is down 20%, you could buy one more call option once it's down 20% or 30%, 40%, and etc, right? Whatever, your risk tolerance is, right? And so basically you repeat these three steps basically. And that's how, this strategy's been working. Honestly, it's been working for a while, honestly. And the reason I go with the mega cap stocks for this strategy and only call options is because usually these I guess you could say these stocks that aren't performing so well in the stock market usually have to go up eventually. And the reason I think that they have to go up eventually is because one, they're a mega, they're a mega they're a mega market cap stock, okay? And so basically these stocks are, or I guess you should say these companies are profitable. And so obviously these companies have to make a comeback because they're, profitable companies. And so basically right now, right, I'm in Pepsi, right? The reason I chose Pepsi was because right now Finviz.com is saying that currently Pepsi is the 6th worst performing mega cap stock right now. And so I've analyzed, this strategy, I want to say at least 12 times already, 12 or 10 times. And out of those 10, all of them have been successful. And basically when you buy a call option, you want it to be a year out. So basically what I mean by that is, like, for example, let's look at Pepsi, right? So you go here on options, and then I chose June 2025, right? It's close somewhat to a year, right? But basically you do this, right? So step one, when you buy that call option on that oversold stock, you go, I don't know, let's say to this, where it says 296D, or where it says 19 September 25, right? So basically whatever the price says, 162.72, you want to buy a call option above that number. So if 162.72 is the current price that stock is at, you want to buy the next stock that's above that number, which is 165 or whatever, whatever stock that you're looking at, right? That's the strike price that you want to, buy. And basically, once you click on it, right, you leave how it is, right? And then you click buy, and it's going to fill out your order, and that way, you'll have that contract under, your position, right, in your possession. And then basically you play the waiting game. Once the position is up 5 or 10%, you sell out the position. If it's down 5 or 10%, you buy another call option, or whatever your risk tolerance is, really. Me personally, I like to suppress my position, like the percentage number, around 10 or around 20%. And so basically I try my best to focus on those 2 percentage levels and basically use those percent. I basically try to suppress my position around those percentages, 10 or 20%. I don't let it go over 30 or 40%. I try my best to suppress the position to being down at least 10 or 20%. And so basically that's what you basically do with this strategy. It is a little complicated, so that's why I created that ebook for you guys to purchase if you're really interested. So if you want to learn how to trade options and start making money, right, purchase my ebook. It's located in the description down below, and hopefully you guys hopefully you guys learn a new skill. I really want everyone to be successful, really. And that's pretty much it, really. So if you have any questions, let me know down below in the comments. And yeah, that's pretty much it. I want to wish everyone a happy Thanksgiving, And yeah, that's pretty much it. As always, take care and bye.